Anil Rai Gupta, Chairman and Managing Director, Havells India, who now joins in on the show. Good morning and great to have you on board. Let's begin with that 10,000 crore, with that 1,000 crore rupee Capex plan. You've slated it out over the next few years. Can you just tell us a little bit more in terms of what this will exactly be utilized for?
I think what you're talking about is a very short-term thing that we are seeing just because of the liquidity crisis that has come about in the last couple of months. I think the government is taking the right steps, both our government and RBI. Things should come up in a very short period of time. This is what we believe. We also see a little bit of contraction in the last couple of months, but definitely this is short-term. I think we have to focus on the long-term prospects, which is, due to the huge electrification drive which has been taken by the government, due to the urbanization which is happening, the smart cities coming up, the focus on affordable housing. So if we look at a longer period of time, medium to long-term perspective of the next 5 or 10 years, there is a huge organic opportunity for any company to grow. And definitely we want to make Havells a part of that growth prospects for India. And hence we are expanding capacities, looking into those prospects in the coming times. So I remain more optimistic about the medium and long-term prospects for the economy.
Okay, so from this entire, overall Capex plan, what is the expected to be the, Llyod contribution? How do you see Llyod shaping up? What exactly have you slated by way of the future plans?
Well, I think we've hit the ground running very well. We did this acquisition almost 18 months back. We've made a lot of improvements, changes in our overall distribution policy, the way we look at the brand, the way we look at the product offering. We are investing into manufacturing. So I think whatever we set out as objectives at the time of the acquisition, we've already moved that way. And I believe that it offers a great growth opportunity for the entire Havells portfolio, given that it's a completely new channel, completely new product category. So, and operating in a larger market pool with a faster growth opportunity because of the aspirations of the consumers are changing. So we definitely feel that there's a good opportunity for Havells to grow because of the Llyod acquisition. And given the fact that we are putting in the right inputs, be it technology, brand, product, distribution, I think we should be able to get a decent share from the market in the coming years for Llyod.
Can we see marginal recovery in coming quarters and metal prices and global prices which have softened as they improve?
Well, absolutely. I think the way we look at margins is that we want to maintain a certain healthy level of margins for our products. And we don't want to be opportunistic in terms of reducing commodity prices and hence making higher margins, because that may or may not be sustainable. In many of our product categories, whether it is increase of commodity prices or reduction of commodity prices, we pass it on to the consumer and maintain a decent margin level for the company and reinvesting that thing. So in this year particularly, if you see, initially the commodity prices went up and now it has started coming down. So I don't see that these short-term bursts either going up or coming down should matter to the company in a big way. I think over a long-term basis, we want to maintain a decent level of margins for the company and pass on the benefits or the cost to the consumer in whatever fashion it comes.
Now, you have seen strong consumer demand across all business verticals. Now, will this continue?
Two things. If you look at the overall market in the bigger cities, as I said, the year started off very well. Last 2 years, there was some disruption because of initial demonetization and GST. Those were good measures for the long term, but initially it had some effects on the demand scenario. So this year started off well. It's only in the last couple of months we've started seeing a little bit of contraction, and that may be, as I said already, that may be a short-term thing, because once the liquidity things get taken care of, the underlying demand should not be that much of an issue. Your question about the B-class, C-class towns in the rural areas, definitely we see growth coming there faster because there's real demand. And there might be an oversupply of real estate in the A-class cities, but B and C-class towns and rural areas, there is real demand coming in, and that definitely means that the more presence we have in these areas, the better growth opportunities that we'll continue to have. This year we are definitely seeing the smaller towns giving us a better growth as compared to the larger towns.
Right. Distribution expansion when it comes to multi-brand outlets as well as traditional channels. What are your plans when it comes to that?
Yeah, so I think the strategy is to have a much wider footprint. As I already said, be present in C-class towns, be present in the rural areas as well for our product categories. That also needs a strategy of making the product offerings such that can cater to these demands. Affordable housing is coming in, that product offering has to be altered a little bit. So a lot of things are happening within the company, and we believe that these inputs will definitely give us better growth prospects in these areas as well.
Okay, Mr. Gupta, good to have you on the show. Thanks so much for taking the time out and chatting with us on the sidelines of the conference.